Hello dear traders, I'm Maria Staradop and this is the review of crypto analytics from fx.co. It's the 10th of October today, Tuesday, and markets prepare for the upcoming Fed's rate hike and what this means for Bitcoin and crypto market, and what macro events were important for the crypto market last week, and what events will affect the quotes this trading week. And we will start with an article by Petrenko, and let's discuss this. So the past week saw Bitcoin and crypto market under a bullish banner, and the main digital asset managed to recover above 27,500, and crypto market capitalization grew to $1.1 trillion. And market sentiments also began to shift in a positive direction, and macro data gave reasons to doubt further tightening of the Fed's monetary policy. However, the conclusion of the past trading week was minor, and this was largely due to the publication of discouraging labor market data, which altered investors' expectations regarding the Fed's short-term plans. And the strengthening of US dollar and the rise in oil prices exaggerated investors' expectations, and the release of inflation data could be the final blow to financial players' expectations. So, what happened last week? At the end of the past week, non-farm payrolls data were published, which showed a robust result despite bearish forecasts. And despite bearish expectations, the indicator reached 336,000, which is the current market cycle is perceived as negative news, indicating a high level of US economic stability. And according to BBG, after the report, the markets began to incorporate a higher probability of a Fed rate hike at the November meeting. And this also led to a negative reaction in financial instruments, since the non-farms data strengthened the US dollar's position. At the same time, there is an increase in unemployment in the US, and this could be a restraining factor for the Fed to raise the key rate. Meanwhile, the armed conflict in Israel has worsened the situation with oil, provoking further price increases due to the restrictive policies of major OPEC Plus members. And this in turn forces the US to maintain a high level of production, increasing of the number of jobs and directly impacting inflation in America. The stock market also notes a decrease in trading activity and worsening bearish sentiment. This is primarily due to the decline in the yield of S&P and simultaneous achievement of the maximum 10-year government bond yields. These data again indicate the strength of the US dollar and US treasuries. And now let's observe the technical pictures of yesterday, 9th of October. Bitcoin was trading around 27,500 with daily trading volumes around $8.2 trillion. billion dollars. Trading activity in the crypto market has decreased due to the onset of the weekend and increased investors' focus on the US dollar and government bonds. There is also a strong buyer presence in the market, according to the stochastic oscillator. Furthermore, let's have a look at the chart. If we consider the local peak from July 13th as the beginning of a downtrend and draw Fibonacci retracement lines to the end of the downward trend at 25,000 mark, it becomes clear that Bitcoin has reached the 0.5 level. This could indicate the realization of upward potential for Bitcoin given the current trading activity in the market. Over the past 7 days, the price has unsuccessfully tested the 0.5 Fibonacci level twice, and there is no reason to believe that this trend will not lead to a reversal. In addition, sentiment notes that the wallets with balances ranging from 1 to 10,000 Bitcoin have resumed accumulation. And there is also a continued trend of increasing stablecoins volumes in the market, as well as profit taking by short-term traders. However, overall market sentiment is positive, and there is confidence in further upward price movement above 28,000. So, making a conclusion, Artem says that concerns are growing in the Bitcoin market due to the potential for a key rate hike amid a strong labor market and oil crisis. Therefore, the markets will closely watch the release of inflation data on Thursday, and this event will be crucial for shaping price trends in Bitcoin in the coming weeks. As for short-term plans, expect a retest of $28,000 in the event of a successful defense of 27,000 level. Okay, and now let's observe another article by Ralph Shedler and also technical picture of Bitcoin. The article was written today in the morning. The information is quite fresh. So, Bitcoin was trading in the green at 27,649 at the time of writing. And as we know from Ralph's previous analysis, the cryptocurrency may resume its growth after the short-term retreat. Technically, Bitcoin moves sideways, trying to accumulate more bullish energy. It retested the lower median line of the ascending pitchfork, which represents a dynamic support, and now is fighting hard to rebound. As long as it stays above it, the crypto may develop a new bullish momentum. The price action developed a triangle pattern, so escaping from this formation could bring us new opportunities. So Ralph's forecast is the following: staying above the lower median line and making a valid breakout through the triangle's resistance validates a larger growth. Okay, let's have a look at the chart of Bitcoin for the moment. It's the 10th of October and Bitcoin opened today at the point 27,591, and now it is trading at 27,668. So far the market is quiet. There is no significant changes. However, it steadily holds the 27,000 level. So as we remember from our articles, it could retest 28,000 level. The idea is still actual, and it can move a little higher as well. Well, this is all for today. We will see each other in our next review tomorrow. As usual, I wish you to have a nice day, to have profitable trading. Don't miss our next review, and see you.